Today, global financial markets delivered a wild ride, with investors and traders around the world glued to their screens as prices swung wildly from one moment to the next. It was a day that tested nerves and strategies alike, as headlines and breaking news sent shockwaves through every corner of the financial system. Dramatic reversals and unexpected turns shook every asset class, from equities to commodities, leaving even seasoned professionals scrambling to keep up. The volatility was relentless, with sharp spikes and sudden drops that seemed to come out of nowhere, making it a true test of resilience for anyone involved in the markets. Silver stole the show, surging to record highs in a matter of hours before a sharp pullback erased much of those gains. The precious metals roller coaster ride was fueled by a mix of safe haven demand, speculative trading, and shifting global headlines, making it the center of attention for both retail and institutional investors. Meanwhile, gold, copper, and oil all saw significant moves of their own. Gold's price fluctuated as investors weighed risk and safety. Copper responded to industrial demand and supply chain news, and oil prices swung on geopolitical developments and shifting forecasts for global growth. The main driver behind much of this volatility was reported progress in Ukraine peace talks, which briefly lifted hopes for stability in a region that has been a major source of uncertainty. Markets responded swiftly, with risk assets rallying and safe havens retreating, at least for a moment. Yet, renewed tensions in the Middle East and fresh economic signals from China quickly reminded investors that the global outlook remains fragile. Headlines from these regions injected new waves of uncertainty, keeping traders on edge and fueling further swings in prices. This day perfectly captured the interconnected nature of our global economy, where optimism and anxiety can trade places in an instant. Every headline, every data point, and every diplomatic development rippled across borders, showing just how tightly linked our financial systems have become. In this chapter, we'll break down silver's wild journey, the latest on Ukraine's peace talks, the dramatic swings in commodities, and the economic updates out of China that kept everyone guessing. We'll explore how each of these stories fed into the day's volatility and what they might mean for the days ahead. By connecting these dots, we'll uncover the forces driving today's market chaos, understand why prices moved as they did, and highlight the key developments to watch as the global financial story continues to unfold. Silver took center stage, spiking to a record $84 an ounce before plunging just as quickly. The surge was fueled by panic buying and geopolitical fears, but hopes for peace in Ukraine triggered a rapid reversal. As optimism grew, investors dumped safe haven assets, erasing most of silver's gains. This whiplash shows how sensitive commodities are to global headlines. Silver's wild ride was a microcosm of today's market, anxious, reactive, and speculative. The record high reflected deep investor anxiety, while the sharp drop signaled hope for de-escalation. Silver is now a real-time barometer of global fear and optimism. Expect more volatility as geopolitical uncertainty persists. The day's biggest catalyst was a remarkable breakthrough in the ongoing Ukraine peace talks, a development that captured the world's attention and brought a sense of cautious optimism to global markets and political circles alike. These high-stakes negotiations were held in Florida, where President Trump hosted President Zelensky at the Mar-a-Lago estate. The setting underscored the gravity of the moment, with security tight and anticipation running high as both leaders arrived to discuss the future of Ukraine and the broader region. After hours of intense dialogue, both leaders emerged to announce that they had reached consensus on 90% of a comprehensive and detailed peace plan. This significant progress immediately raised hopes for a possible end to the devastating conflict that has gripped Ukraine and unsettled Europe for years. Despite the encouraging news, several key sticking points remain unresolved, particularly regarding the status of contested territories and the future of certain border regions. However, negotiators reported that security guarantees for Ukraine, long a major concern, are now nearly finalized, marking a crucial step forward. The financial markets responded almost instantly to the news, with investors and analysts closely monitoring every update. The prospect of a lasting peace eased widespread fears about disruptions to energy supplies, food security, and the risk of a broader regional conflict. As optimism spread, demand for traditional safe haven assets like silver and gold began to fade. Investors who had previously sought refuge in precious metals started to shift their focus, selling off holdings as confidence in a peaceful resolution grew. Diplomatic teams from both sides are set to continue their discussions in the coming days, with negotiators expressing a renewed sense of purpose and momentum. The world is watching closely, hopeful that this progress will translate into a lasting agreement. The potential end to a major European war would not only bring relief to millions affected by the conflict, but also remove a significant source of global instability that has weighed on economies and international relations for years. With the threat of war receding, investors began to shift their attention toward assets that stand to benefit from renewed economic growth and stability, rather than those that simply offer protection in uncertain times. All in all, this was the most positive and uplifting market story in months, offering a rare moment of hope and optimism in a world that has grown accustomed to uncertainty and crisis. Beyond silver, a host of other commodities mirrored the ever-changing global landscape, each responding in its own way to the latest headlines and undercurrents shaping the world economy. Gold, the age-old safe haven, hovered near record highs. This enduring strength signals that investors, wary of sudden shocks, are still clinging to traditional safety nets. Even as some risks seem to recede, the appetite for security remains strong, with gold acting as a barometer for global anxiety. Oil prices, meanwhile, rebounded above $57 a barrel. The market found itself pulled in two directions. On one hand, optimism over potential peace in Ukraine, and on the other, the ever-present threat of renewed tensions in the Middle East. This tug-of-war keeps oil traders on edge, as every diplomatic development or flare-up can send prices swinging. Copper, often seen as a bellwether for industrial health, surged over 6%. This rally was powered by hopes for stability in Europe and robust policy signals from China, which suggest stronger demand ahead. As infrastructure projects ramp up and manufacturing recovers, copper's fortunes rise, reflecting optimism about future growth. Platinum's journey was more turbulent. Prices plunged before staging a recovery, highlighting its unique position as both a precious metal and a key industrial input. This dual identity means platinum is sensitive to both investor sentiment and shifts in manufacturing demand, making its path especially volatile. All these moves together reveal a market in flux, constantly balancing hope for peace with the reality of ongoing global risks. Investors and traders are forced to weigh every headline, every policy announcement, and every geopolitical twist as they navigate uncertain waters. Today, commodities are driven by a complex web of diplomacy, conflict, and economic policy. The interplay between these forces creates a dynamic environment where fortunes can change in an instant, and where every decision by world leaders or central banks can ripple through markets worldwide. The resilience in gold and the rebound in oil prices underscore the persistent anxieties that continue to shape investor behavior. Even as some markets recover, the underlying sense of caution remains, with many bracing for the unexpected. In the end, today's price action paints a vivid picture of cautious optimism set against a backdrop of uncertainty. The world watches, waits, and reacts, one headline at a time. Just as peace hopes rose in Europe, new threats emerged from the Middle East. Iran's president declared an all-out war with the US, EU, and Israel, rattling investors. This came ahead of a high-stakes US-Israel summit, with Iran's nuclear ambitions in focus. Markets watched closely, knowing any escalation could disrupt oil supplies and global stability. These tensions kept gold resilient and pushed oil higher, despite Ukraine optimism. Investors now face a more complex risk map, balancing peace in one region against war in another. The market's mixed reaction, selling some safe havens, holding others, shows this delicate balancing act. Volatility is likely to remain high as traders weigh these competing risks. Meanwhile, China sent important signals about its economic direction for 2026. Beijing pledged more targeted fiscal support, focusing on high-tech, green energy, and digital infrastructure. This mature approach reassured markets, reducing uncertainty about China's growth. Copper prices surged on expectations of stronger Chinese demand. These policy signals offset concerns about slowdowns elsewhere. For global investors, China's commitment to quality growth is crucial. The world's second-largest economy remains a key engine for global demand. Clear policy direction from Beijing offers a reason for cautious optimism. China also made waves with two major currency moves. First, Commercial banks will pay interest on digital yuan holdings, making the ECNY more attractive and accelerating its adoption. This is a big step in China's push to digitize its economy and challenge the dollar's dominance. Second, state media warned traders against betting too heavily on the yuan, signaling Beijing's intent to curb speculation. These moves show China balancing innovation with stability. The digital yuan could reshape global finance, but authorities will tightly manage its rise. For investors, policy, not just market forces, will drive the yuan's value. Expect a managed, gradual path toward greater international use. China's approach provides predictability, but also underscores its control over currency markets. Amid global turbulence, Asian stock markets quietly advanced for a seventh straight session. The rally, led by tech giants, reflected optimism about peace in Ukraine and China's supportive policies. South Korea, Taiwan, and Japan all posted gains, with tech and manufacturing leading the way. Even a strong yen couldn't dampen Japanese stocks, showing the power of global optimism. Still, gains were modest, and U.S. futures pointed lower, signaling lingering caution. Investors remain alert to unresolved risks, from Ukraine to the Middle East. Asia's rally is a cautious vote of confidence in the region's fundamentals and hopes for easing global instability. Today's market chaos showed just how interconnected our world has become. Peace talks in Florida moved silver, while Middle East tensions kept gold and oil elevated. China's economic plans fueled a copper rally, highlighting the global web of influence. Investors can no longer focus on single issues. Every development matters. The next key events: follow-up Ukraine talks, the US-Israel summit, and China's economic data. Any setback in peace negotiations or escalation in the Middle East could quickly reverse today's optimism. Navigating the future will require a steady hand and a global perspective. The balance between hope and risk will define the markets in the days ahead.